Imagine a network so fast, it makes blockchains look old school. A system that doesn't rely on miners, blocks, or gas fees. It finalizes thousands of transactions in seconds, costs less than a fraction of a cent, and runs carbon negative. This isn't some new chain promising miracles. It is Hedera, and it's already being run by Google, IBM, and Boeing. Today, we're breaking down everything you need to know about this quiet giant of the crypto world. The technology, why Hashgraph leaves blockchain in the dust, the tokenomics with the fixed 50 billion supply built for long-term scarcity, the partnerships bringing real adoption through global enterprises and CBDC pilots, the accessibility or how the HBAR ETF and Grayscale listing open the floodgates for institutions, and ultimately the millionaire math, exactly how many tokens could make you a millionaire next cycle. By the end of this video, you will know if this enterprise infrastructure play must be in your portfolio and exactly how much could change your life. So let's break it down. This is not financial advice, always do your own research. Hedera launched in August 2018 with a revolutionary premise. What if we could build something faster and more efficient than blockchain itself? The network went live with open mainnet access in September 2019, following a successful ICO that gave early investors the chance to purchase HBAR at the lowest possible prices. Meet the minds behind Hedera too. Dr. Lehman Baird, a distributed systems expert who invented the Hashgraph consensus algorithm, and Mans Herman, a technology executive with deep cybersecurity experience. What is their mission? Create a fairer, more efficient alternative to traditional blockchain that eliminates slow performance and instability. Here's where it gets interesting though. Hedera doesn't use blockchain at all. Instead, it employs a directed acyclic graph structure with Hashgraph consensus, a patented technology from Swirls that was later open sourced. The network uses an innovative asynchronous Byzantine fault tolerance mechanism, achieving finality in 3 to 5 seconds with throughput up to 10,000 transactions per second. Transaction fees under 1/10 of a cent. And it's carbon negative too. The price right now of HBAR is 14 cents with a market cap of $6.2 billion. Now on to the tokenomics and supply analysis. The economics of HBAR are crucial, especially for such a high supply token. Hedera has a strict max supply of 50 billion HBAR. This is a hard cap, meaning no new tokens will ever be created, making it non-inflationary in the traditional sense. Its circulating supply is currently very high, at around 42 billion HBAR, representing over 85% of the total supply. The distribution is unique. Instead of a large retail ICO, the supply was heavily allocated toward the long-term utility and governance of the network. Looking at the latest reports reflecting the December 2024 allocations, here is how the entire 50 billion supply is broken down. The vast majority, over 50%, is dedicated to ecosystem and open source development, primarily through the independent HBAR Foundation. This is your long-term commitment to adoption. The remaining supply is divided between purchase agreements, investor sales, and operational costs, which include the compensation for the governing council members who run the initial nodes. The ongoing supply increases are governed by a structured vesting and unlock schedule for these pre-minted tokens. This controlled long-term release is designed to prevent sudden market dumps and align the interests of these large institutional holders with the network's long-term success. For yield, HBAR offers liquid staking. You can delegate your HBAR to a network node and earn rewards without having to lock up your tokens. The current annual reward rate is set at approximately 2.5% on platforms like Coinbase, making it reliable but modest source of passive income. I would like to draw your attention now to the network performance and the Hedera ecosystem growth. Firstly, Hedera processes up to 10,000 TPS with 3 to 5 seconds finality. Compare that to Ethereum's 15 to 30 transactions per second. Hedera is way better. No waiting for block confirmations, and transactions are final immediately. Now, let's talk about the partnerships. This is where Hedera shines. The governing council includes 30 and more global enterprises. Google, for example, is operating nodes and does BigQuery integration for on-chain analytics. Another big name is IBM, as they secure supply chain and asset tracking systems. And there's a central bank in the mix too, the Reserve Bank of Australia, with Project Acacia for tokenized finance. Other huge names amongst Hedera's partners include Boeing, Deutsche Telekom, LG, Ubisoft, and Standard Bank. Here are some more real-world use cases of Hedera that are live and not just theoretical. NASA-funded research on aerospace data exchange, Deutsche Telekom's Frank eSIM with HBAR micropayments, CBDC pilots with central banks, Wyoming's FRNT stablecoin, which is exclusively ran on Hedera, and the Nairobi Securities Exchange Innovation Lab. If you thought I was sugarcoating the project until now, it's time to look at an area where I'm typically very critical of, by necessity. That is the decentralization and risk factors. In this case, Hedera's model is a distinct trade-off. Its governance is highly stable, run by a governing council with equal voting rights and term limits. However, the current network nodes are permissioned, run only by these trusted council members. While the roadmap points toward eventual community-run nodes, its current state is less decentralized than open, permissionless rivals. The biggest concentration of ownership lies with these council members and the HBAR Foundation. This high concentration of ownership is the price paid for stability and institutional endorsement. But it also means retail investors rely heavily on the council's stewardship. On the regulatory front, Hedera's centralized node governance may actually be an advantage. Regulators prefer dealing with known, vetted entities. The high-profile adoption by central banks and global financial firms suggests Hedera is navigating the regulatory landscape quite successfully. Competition, however, remains fierce, especially from fast L1s like Solana and Avalanche, and newer RWA platforms too. We're moving towards the juiciest part of the analysis, and that's the price history and the Millionaire math. The price of HBAR right now is 14 cents, but historically it has had its ups and downs. Since launch, it started dropping and it hit an all-time low at the end of 2019. And since that bottom, the price skyrocketed and hit a new all-time high in September 2021, gaining over 5,000%. And afterwards, the new all-time high, the market's valuation dropped minus 93%. After that, the price has been pretty much in consolidation, and then at the end of 2024, exploded again by gaining 800% in 4 weeks. Since that time, HBAR has been in correction and is now down 63%. So let's calculate how many HBAR tokens we need to retire as millionaires based on 3 different scenarios. In the context of a new alt season, the rather pessimistic case is if HBAR hits the previous all-time high at 60 cents. That would be 4 times from this zone right now. At 60 cents, we would need 1.6 million tokens, and that would be an investment of $250,000 right now. For the base case, if HBAR reaches a new all-time high, that would most likely be $1, which is 7x from here. So that would require 1 million tokens to buy, and this will set us back $142,000 today. And finally, for the bullish case, HBAR hits $3. That would be 21x from here. We would then need 333,000 tokens to reach the million down the line. But before that, we would need to part with $47,000. Now, to put it in perspective, if HBAR was to hit $3, it would reach almost today's market cap of BNB, and I know that's pretty ambitious. With all these scenarios outlined, the biggest question now is, what ignites the next bull run? Well, it all comes down to institutional catalysts and accessibility. 2025 has been a game changer for HBAR. First, for retail. The token was officially listed on Robinhood US in July 2025. That instantly brought millions of new easy buyers into the market. Second, for the institutions, the walls came down completely. In October 2025, the Canary HBAR ETF launched on Nasdaq. This was a monumental event. The first spot altcoin ETF approved beyond Bitcoin and Ethereum, effectively turning HBAR into a Wall Street accessible asset. This regulated highway for capital immediately saw over $70 million in inflows within the first couple of weeks. Grayscale also added HBAR to its smart contract platform offerings, confirming its status as a foundational enterprise asset. If the Bitcoin ETF effect plays out here, HBAR is perfectly positioned to absorb significant capital, acting as a profound tailwind for our bull case scenario. You've seen the data, you've seen the partnerships, you've seen the upside math. Hedera isn't a meme coin. It's an enterprise infrastructure with real-world traction. So what is your take? Drop your HBAR price prediction below and tell me when you think this network finally gets the recognition it deserves. Now, if you found this breakdown valuable, then like this video guys and hit the subscribe button so you don't miss our next Millionaire Math deep dive. I'm Stan, thanks for tuning in to airdrops.com once more, and I'll see you next time. Ciao!